Bitcoin ETFs. BlackRock wasn't the first institution to have Bitcoin ETFs.
Why don't we make our citizens stakeholders in these projects? Still need to get investors interested in whatever you're selling. Just because it's a token, or if it's paper-based shares, or if it's some other kind of digital security. The security in itself should speak for its value.
Nabil, welcome. How are you doing, man? Thank you for joining me. I know it's been a complicated day for you today.
Absolutely, man. But thank you for having me, Carlos. It's a pleasure to be here.
You're here, obviously, as a member of Polymath and by extension of Polymesh. So would you like to sort of start the conversation off by telling people like what the configuration is of everything you guys are building and obviously what Polymath does, one of the oldest players in the RWA field?
Absolutely. So I've been with the company since 2022, 2023 timeframe. But the company has been around, I believe, since 2017 and 2018. Back in the day when ICOs were a thing, that's where Polymath was launched. And over the years, the company has gone through phases of transitions. So when the company started off, by authoring the ERC 1404 standard for security tokens, and it was very much focused on the Ethereum ecosystem. Over some years, the team kind of realized that a general purpose blockchain is not really fit for specific niches such as security, such as financial securities. And for example, in the Ethereum ecosystem, if I have your wallet address, I can just send you whatever. You don't have the opportunity to accept it or decline it. Mm-hmm. You have to hold it. Mm-hmm. That's one of those big challenges. Plus, when you think about the node operators, anybody can become a node operator on the Ethereum ecosystem. So looking at some of these challenges, the team at Polymath decided to build their own layer 1 blockchain. Mm-hmm. And back in 2021, they launched Polymesh. So Polymesh was structured as a not-for-profit association based in Switzerland, which built out the blockchain and was responsible for ecosystem growth. And the companies were kind of split in two. Polymath became the for-profit arm, headquartered in Canada, and Polymesh became the not-for-profit arm, headquartered in Switzerland. Now, when you think about Polymesh in itself, it is a layer 1 blockchain built on Polkadot substrate, and many of the things that you would have to do within kind of an EVM setting, where you would have to build smart contracts and do it again and again for each security that you issue, all of those things were abstracted away and provided as APIs. Mm-hmm. So you could just use the SDK, use those APIs, and easily issue securities within those laws, regulations, depending on your regulatory framework. Beyond that, when you think about the Polymesh node ecosystem, we currently have around 80 node operators, and what makes this, and although relatively small number, but what is very unique about this is that all node operators need to have some sort of a financial license.
Oh,
so, yeah.
Okay.
So it can't really be anybody can come in and set up a node. There's a vetting process, and they need to go through that entire process. Beyond that, up until very recently, KYC was a major thing in the Polymesh ecosystem. So you could only transact, even stake, only if you had gone through KYC within the Polymesh ecosystem. So this is where we kind of started out. Obviously, fast forward a couple of years, when I joined the company in 2022, 2023 timeframe, and just for context, my first startup was acquired by Polymath. So it was called Meta Finance, and that's how I ended up here at Polymath. And over the years, we've seen kind of the space transition into more of a open ecosystem. Rather than having this focus on KYC and very stringent measures, we've seen a lot of securities being issued on Ethereum, for example, on Solana, for example. And we are kind of looking at this as an inflection point that maybe we have to kind of go with the market flow. So what's been happening over the past year, 18 months, is that Polymath, as the holding company, has reintegrated Polymesh as a wholly owned subsidiary. So Polymesh, that was a non-profit in Switzerland, has now become a wholly owned subsidiary based in Cayman Islands called Polymesh Labs. And we have kind of aligned ourselves to grow this ecosystem together. At the same time, we are also in the process of going public on the Toronto Stock Exchange. So hopefully by the end of this year, our share should be trading as well.
All right. Uh, Couple of points to follow up there. First of all, yeah, at some point, I wanted to ask you about the KYC element of the chain, because one thing that made Polymesh unique and Polymath unique, it was that that was integrated at a chain level. Now you're telling me, however, and I wasn't that aware of this, that you're sort of like trying to move alongside the ecosystem and not make everything as dependent on KYC and all these checks. So would you say that's a good thing for the industry that we're moving in that direction? I know yesterday we had a big debate on that, but I don't remember if you got to issue your own take on that.
Absolutely. I mean, 5 years ago, there was this big thing in the industry where, securities and KYC and AML checks. This was a major thing, but there was basically a trade-off. If you look at general purpose blockchains, or just generally the overall crypto ecosystem, um, a lot of people don't want to get KYC on chain.
No,
You know
definitely, yeah.
that's and so the trade-off over here was that, okay, Polymesh was so focused on compliance and on KYC, but that kind of hindered users from coming into our ecosystem. So that's really been the trade-off for us. And we're realizing that with some of the new companies that have come into this space and the new approaches that we've taken, especially from a regulatory perspective, there is somewhat more clarity. For example, there are a couple of companies in the US that have figured out a way to get securities on decentralized exchanges. But the way that they're doing it is that only at the primary issuance level, you have certain brokers that have to be KYC'd. So they're the ones who buy it in the first place. And then they would sell it on a decentralized exchange. So that primary buyer becomes kind of the on-ramp and off-ramp into the decentralized world. But once it's already on a DEX, then anybody could buy it.
Right.
Yeah. So the space has kind of evolved significantly, and you know how fast things change in crypto. So we're really trying to figure out what where the next wave of growth is going to be, and we want to move in line with the market. Obviously, not giving up our roots in kind of building a compliance focused chain for the securities market, because that is still a very unique and special market for us, and that is always going to be the focus. But we also want to make sure that we can kind of balance KYC and compliance requirements with providing a better user experience as well.
And yesterday, I might refer a couple times to yesterday discussions for people that were not there, which is everyone. Yesterday we hosted like a little debate session on RWAs with different players in the industry, and the goal of it was like to issue controversial hot takes, and then for them to either agree or disagree with them. And I think one of the points that raised like the most contention was the fact, like I think was pretty evenly split. Like 50% of the audience thought like the whole point of being on chain was to not have to do all this KYC thing, like have to adhere to regulations so strictly, and the other half, which are like honestly the people that are more in the tokenization side of things, they were like more, their minds were more set on the fact that we do need these things. Do you think there's a balance that we can achieve there as an industry?
Absolutely, I believe there is a balance that has to be achieved. I don't think there is a choice. And if you look at most of the capital markets in the U.S. right now, if you're living in the U.S. or Europe, you've been accessing stocks or any kind of financial instruments through some of these legacy players.
Yeah.
So for example, I use IBKR to buy stocks. Now, you have to go through KYC to do that. It's never really been two questions about that, and there are rules for a reason, and I believe they
Pretty much
should.
every financial activity, even like having a PayPal account.
Absolutely, absolutely. So you have to go through KYC. Now, I think when you look at it from the perspective of markets that are outside of North America and Europe, you think about emerging markets, for example. Do people in emerging markets need to go through KYC? That is kind of questionable.
And do they need to go through KYC outside of their jurisdiction, right? So, like, do I need, as a Mexican, to KYC with and with an American company? Probably not.
Precisely, precisely. So that's really kind of where we need to find that balance. And what we're seeing in the market is that, people who have been using these the existing financial platforms, they will continue using it. But the people who've never had access to securities from North America and Europe, I think we are kind of broadening access for them. And very simply, we talk about security tokens, and stablecoins is kind of that, a very good example of that because it's backed by US treasuries. And now stablecoins are available to users all across the world. So I was born in Pakistan. I've been fortunate to be spending some time there recently. And I was quite surprised that a lot of people are familiar with crypto. They hold USDT, USDC as a form of, I guess, diversification because they don't want to hold their local currency, and especially those who work for companies and clients abroad. This is also a way for them to receive payments.
Yeah.
And even if they're using an exchange, some exchanges require KYC, some don't. If you're using a Web3 wallet, you can probably get away without doing any KYC. So I think there is a balance, definitely. But we also have to look at the magnitude, right? If somebody is only dealing with $100 or $500 or $1,000, I don't think they're a threat to the financial ecosystem. But somebody who's moving probably tens of millions, that is something where there should be some check and balances.
Yeah.
Yeah.
And do you think when it comes to like bringing more of the economy on chain, and this is another debate we've been having, but like outside of any public space with my colleagues, do you think like when it comes to moving the world on chain, is it more about the composability? Is about the cost saving factor of like being able to do everything 24/7 without like a company running it? Or is it about the number of people you can onboard? And I don't mean from an ideological perspective, but I mean from like a business perspective, from like the mega funds and the mega corps of the world. Like, which factor do you think excites them the most to come on chain?
From an issuer's perspective, my day-to-day job is speaking to issuers. And my goal at Polymath, my mandate is to bring assets on chain. So I speak to a lot of issuers, and that ranges from REITs in the Middle East to private equity firms and alternative asset managers in the US to even the government of Pakistan. And when we start off with these discussions, one of the big, how should I put this? One of the big misconceptions that people have is that, okay, just because if we're going to tokenize this asset or this fund that I have, people will just come and buy it. But that's not really how this works. Because at the end of the day, you still need to get investors interested in whatever you're selling.
Yeah.
Just because it's a token, or if it's paper-based shares, or if it's some other kind of digital security, the security in itself should speak for its value. That's really what is core, right?
Yes.
So whether it's a sound investment offering or not. But the bottom line for each issuer, or for most issuers, I would say, is does this bring me net new capital, or does this bring me net new investors? That is really the bottom line. And if you've seen kind of the ecosystem, how it's played out, we've obviously been focused a lot on the technology in terms of how we can issue the tokens, or all of the features of those tokens, how we can build that in. But I think kind of the bigger picture over here is distribution. How do you get this in the hands of investors across the world? That's really what issuers are interested in.
Okay, and that's, let's say, like the biggest misconception, and that's what they're interested in. So is that how these conversations typically get started?
Could you rephrase that?
I mean, in terms of them reaching out to you, or like you showing up at their doorstep. Usually, what's the first point of contact like?
So we receive a lot of inbound at Polymath, and for example, there was a gentleman who came to us from a South American country. He's like, I have this business and I would like to tokenize it.
It's a legal business.
Huh?
Is it a legal business?
It was I did not really
I'm
gauge.
kidding, I'm just
I did
like
not really gauge if it was legal or not, but it was a business,
okay.
and he wanted to tokenize that business, and his question was, "Do you have investors who are willing to buy?"
Right.
And I was kind of stunned, but this is kind of a lot of these requests that come to us are like that. That okay, I have this asset. Do you have investors who will buy it? What is my offering? What is the deal? They're not really clear on that.
So they're really just looking at tokenization as a way to get investors and easily be able to issue shares to them and
Precisely,
yeah. So
precisely.
obviously a misconception, yeah.
Absolutely, and I think as a startup founder myself, just because I have an idea which I think is great, I still need to go out and convince investors.
Yeah.
And if I give investors, a legal document saying that they will have this much equity in my company or they will have these many tokens, I still need to convince them. That is the most important part. So what I've also seen in this space is the companies that have been very successful at tokenizing assets have been those companies that already have an established brand. So think about the largest asset manager in the world, BlackRock. The Biddle Fund is kind of that poster child for tokenized securities, but BlackRock already had a brand in the market.
Yeah.
They didn't really have to go out and convince people that you should buy whatever we're tokenizing. Similarly, you think about Apollo, think about Blackstone, and some of these other companies. They already have that established brand, and that's what they've been able to leverage in terms of people already trust us. So if we tokenize it, if we put it on these internet capital markets, there should be additional distribution available or additional investors that are now able to access these investment offerings across the world.
And I think you make a very good case with BlackRock, for example, and being the poster child of this, and also like their own tokenization project, like getting so much traction, and you can see sort of the scale of these things when it comes to like, for example, something like the Bitcoin ETFs. BlackRock wasn't the first institution to have Bitcoin ETFs, but obviously it's the one that like had the most repercussion and the one that has moved the fastest and attracted the most inflows because it's just a well-known name that things tend to go their way, right? And I think something like BlackRock's Biddle Fund gives investors a lot of security when it comes to tokenized assets in terms of like, okay, this is a thing that's established right now. This is a staple already. That's something that's going to be in the industry for a while. When it comes to, for example, someone like the government of Pakistan, what do they come to you for, or like what's their mindset when they approach someone to do tokenization?
So the problem that was presented to us by the government of Pakistan was, how can we raise $1 billion in foreign exchange? That was really the problem that was presented, and my CEO Vince and I kind of had these discussions internally in terms of how do we do this. I mean, we definitely have the technology, we can issue the security, that's not an issue, but how do you actually get $1 billion, and why would you get that? And I think for context, we have worked very closely with the Pakistani Crypto Council. Vince and myself had the opportunity to also meet the Prime Minister a couple of months ago to kind of present a proposal in terms of how we could make this happen. And this was also regarding one of the largest gold mines, I believe, gold and copper mines in Asia, which happens to be in Pakistan. And 50% of that mine is owned by a Canadian mining company called Barrick Gold. And the remaining 50% is owned, 25% is owned by the government of Balochistan, that is the provincial government, and 25% by the federal government. So since this was a problem presented to us by the federal government, and they own 25% of this, and I although I don't remember exactly what that number was, but the mine was going to create billions of dollars in cash flow for the next 40, 50 years maybe. You can fact check me on that, but that was kind of the collateral. So when we went in and when we had these discussions internally, and what we kind of presented was that, okay, as the government of Pakistan, you already own this asset. You do expect, and this could probably be third party verified as well, that there are already these reserves in the ground, and you will be making X amount of billions of dollars every year from 2028 once the mine becomes operational or something. And the idea was that, okay, if you own that, then why can't we just tokenize this revenue stream in itself? You know, if
Ah,
so, you have investors. You think about the Pakistani diaspora. There are many Pakistanis who live across the world, in the US, in Europe, in the UK, and they have previously invested in projects within the country. So instead of going to the IMF and asking for a loan, why don't we make our citizens stakeholders in these projects that they would own, and they would also be able to kind of reap the benefits for many years to come. So it was really a problem in terms of how we structure the deal. These conversations are still ongoing,
right.
but again, the problem was, the way that we kind of took this was, it wasn't really a technology thing. The technology was the easy part,
Right.
but how you structure it, and then how do you get the word out to the Pakistani diaspora or international investors, sovereign wealth funds, to make that opportunity attractive to them to actually come and buy it.
I get it, and that's a good question. I think, like, okay, let's say this deal goes through. You tokenize the revenue stream for this, and now you have the ability for any asset manager in the world to participate in this revenue. How would you then, like, what in your opinion would be the best way to make that available to them? Because, like, obviously my crypto mind is like, go go into website, click launch app, connect MetaMask, and
Yeah.
it's definitely not gonna look like that for them. So what do you think is like the way you present this in terms of making it available, let's say UI UX wise?
That's a great question. I think the team at Polymath has thought very thoroughly about this, because even the white label solution that we offer, called the Polymath Capital Platform, it has a very Web2 experience. So you don't really need to remember your seed phrases or manage your secret keys, anything of that sort. Your private keys, sorry. It's as simple as you putting in your email address, you receiving a link, and we take care of all the complexities at the back end. You don't even have to worry about gas fees, anything of that sort. Because I think what we've been very clear about is that this transition from Web 2 to Web 3 requires a very smooth UX for these users. And although a lot of the people that we meet at crypto conferences are kind of savvy with that, but a lot of the people who actually have the money and who are old time investors, they don't really want to go through that process.
I like the distinction between people in crypto conferences and people that have money. Yeah,
Absolutely.
that's the case.
I
Honestly.
mean, people at crypto conferences and the people who are not at crypto conferences is
Yeah.
probably a better way. People
Yeah.
at crypto conferences also have a lot of money, I believe. So
You'd be surprised. Yeah, yesterday I'm gonna go on like a stupid detour, like just a quick anecdote. Yesterday, someone approached me at a crypto party, and he was like this VD guy. He comes to me and he's like raving about like, oh, we're doing this great thing at the intersection of DeFi and AI and so on, and we're like, the way we're doing it is so unique. We're able to offer our users 387% APY on USDT, and I'm like, well, yeah, that sounds good. Show me. He shows me his account, $30 there. Then this is the person that's chilling it around. So yeah, not so much on the money side. But sorry, continue.
yeah, absolutely. I mean,
I mean, yeah, when it comes to presenting these things to these individuals that do have money.
100%, 100%. So at the end of the day, it's what is the offer? What is the offer? I think is the most key thing. Like even in the crypto world, we see a lot of projects come up, and everybody seems to have a unique offer that they're selling, a unique value proposition that they're selling to the world, to the crypto community. And similarly, even in the securities, in the financial securities market, there is that unique value proposition that you just need to make clear to your investors to get them interested.
And like when as I've been doing this podcast series, people like you, people like the Solana head of engineering, people like Centrifuge, I get the chance to talk to their chief legal officer, a very interesting conversation, as well as a panel with several RWA players. Everyone sort of converges around the idea that tokenization is actually right now is the easy part. The hard part is like doing like models that make sense for the external world, like what you said, like when it comes to this gold mine project, like how do you structure it, how do you present it, how do you convince people to join it? So I think that's where these conversations are most productive, because you get to sort of like lay out all the different playbooks that are out there, and we're really at a point where we can see them play out in real time and see what the repercussions of each ones will be, and what the benefits of them will be. What do you think you guys in particular do better when it comes to structuring these, even from the legal perspective or from the financial perspective?
So we've never had this capability in house, but one of the other mandates at Polymath for me has been to build out a partnership ecosystem, or rather an ecosystem of partners. And what I mean by that is there are many stakeholders that are involved in this entire process. So, for example, point zero for us is when an issuer comes to us, they own an asset, they own a business, they own something, and they would like to tokenize it. All the way to the last point, which is the asset is already tokenized and investors have bought it. And there's a lot that goes in between. So the first step is really the legal and structuring aspect. So we work with a number of lawyers, depending on the jurisdiction that you're in. We would make introductions to our lawyers, to our lawyer partners, and they would kind of help you with the legal side of it, with the structuring side of it. And once that is done, we can actually tokenize the asset, and then we would put you in touch with our broker dealers. So broker dealers also operate in certain jurisdictions. So we have partners in North America, in Europe, and we would make introductions accordingly. And they kind of help with getting distribution for the tokens or for the securities that you have issued. So one of the interesting things with where we are and the evolution of our company right now is we're reversing into a company called Analytics Insight, which has been listed on the Toronto Stock Exchange. And they have two existing lines of businesses. One is MarketWall, which has a MiFID II license in Europe. So that would allow us to now start acquiring licenses and provide distribution as a service as well in certain geographies and jurisdictions. And the other one is Capital Cube, which is more of a data platform that is already being used by asset managers, hedge funds of that sort. So that's kind of where we can get supply of assets from a software like Capital Cube, given the users of that, and then also figure out that distribution side through the business, which is MarketWall.
And I think we're saying things nicely to move into a field I really wanted to touch on, which is real estate. You told me you've been working closely in bringing some real estate assets on chain. What's that process like? Because right now I feel like the regulations are not quite there yet in a way that it can be very straightforward. But of course, if you're working on it, there has to be a path. So what do you think is the path?
I believe the path really depends on where the real estate is located.
Of course, yeah.
And how it is currently owned. There are a number of platforms across the world that have that offer digital shares in real estate, or be it tokenized or not tokenized. So there is, I think, somewhat of a path. I mean, there's this company in the US which allows you to buy shares of real estate from as little as like $50. I'm blanking on the name of it, but similarly, there are a couple of companies in the Emirates, in Dubai specifically, which also allow you to buy that.
Yes.
One of the things to consider over here is that you can tokenize, or you can structure a real estate offering in different ways. You can do that on a fund level, a fund that owns multiple properties, and you can tokenize that fund. You can do it on a individual property level as well, where you have a house and you create X number of shares, and then you can offer that to the market.
Yes.
So it really depends on what the issuer wants, because the issuer is kind of the main, is the client who is looking to raise capital, and we kind of become facilitators in that process. And again, depending on where the real estate is, what you're looking to do, like if you're looking to raise capital for a new development project, for example, then again, you would go to different types of investors. Not every investor is interested in the same thing, you know. And we would just work with our lawyers, we would just work with our broker dealers to figure out what is the optimal path to get this asset distributed.
And perhaps I think like the figure I read recently was like 380 trillion dollars in real estate is expected to come on chain within the next 10 years. So it is a very big number. No, I think that was in total, not in the next 10 years, but like eventually we're moving towards this. And there is obviously like that is obviously not the case right now. Like right now, this is a relatively small share even of the RWA market. How do you see the panorama evolving as there are more tokenization of real estate companies as that very specialized field grows? Do you think we'll see sort of tokenization being integrated as a default part of the real estate market as a whole, or will there still be a very clear separation of, okay, this is like a more degen way of doing things, this is like a more crypto native way of doing things? How do you think that will evolve?
Broadly speaking, I think the on-chain economy will only grow in the coming years, and real estate, a lot of real estate should technically come online, because at the end of the day, either if you're an issuer, which is who's supplying the asset, or you're an investor who's buying the asset, the questions that you ask yourself, and I think that has consistently been the case across centuries, is that does this help me make more money, and does this help me save costs? And I think bringing these assets on chain kind of do both of those things, because the assets that are liquid and tradable, they usually go up in value, and I think there's a research that has been done on this as well. And you think about the transaction costs that are involved in just transacting real estate today, they are relatively high compared to if those transactions were to happen on chain. If the house was tokenized, the title was kind of an NFT, and you could trade the underlying security as well. So I don't know if it's going to be 300 trillion or 500. Those seem like very big numbers, but they are not unthinkable.
Mm-hmm. And when it comes to, let's say, the perspective from the issuer's point of view, obviously, which is like the people you're most used to interacting with, do they primarily see this then as a way of like raising capital? Because I think that's a very attractive proposition for real estate. Like you already have this asset, and you don't really like. It's hard to get capital in the normal market from owning real estate, right? So this can also incentivize a lot more liquidity for them.
I would say raising capital has always been a relationship game. And you think about all the institutional funds, and when they go to institutional investors, they have to build that relationship. They have to build confidence in them actually fulfilling the promise that they're making to investors. I don't think that really changes even if assets are on chain or not on chain. But where the value is that once you bring these assets on chain, obviously from a primary distribution side, you will still have a lot of institutional investors involved that will make the bulk of the cap table or the ownership. But at the same time, you're not only restricted to them, because now you can offer the same opportunity and offering to retail investors across the world. So there's this distribution element. Beyond that, secondary trading or liquidity is definitely something that is attractive, because a lot of these real estate funds today, they don't really have that opportunity that they can offer to their investors. So I think that is an additional value add. But beyond that, I think, or rather in addition to that, you can also think of it as the other financial services that you can offer. So for example, if I own X amount of units or tokens in a particular real estate offering, I should be able to borrow against that, which currently there is really no infrastructure to do that. And even if there is, you need to know somebody who knows somebody in order to get that. And then somebody has to go verify that data, go through that entire process. So by coming on chain, I think it's going to unlock a lot of opportunities, a lot of additional services that have not necessarily been available to a majority of the people.
Hmm.
And I think that's really going to be the great unlock for us.
All right, yeah, that's something like I think when people talk about DeFi composability when it comes to RWAs, they miss something like that like very straightforward. Like currently, it's hard to borrow against a lot of assets, and usually that involves like relationships, like you say, involves like talking to banks, involves a lot of things that can be made very easy with DeFi, and it's also why I think like one of the very first applications of DeFi was precisely lending, and one of the first things that we actually got right as an industry was these lending protocols that are very straightforward and in their formulas and in their internal workings. To finalize, can I ask you about your IPO?
Yeah, absolutely. We're going public on the Toronto Stock Exchange, the venture exchange over there, by reversing into this company, Analytics Insight. Ticker symbol is ALY, ALY. We're currently just closing our fundraising round for that because we need to maintain a certain minimum float on that market. And I'm looking forward to kind of seeing Polymath shares being traded on the exchange within Q4 of this year.
I'm curious. What's the how do you see the relationship between like your presence, which so far has been in the crypto market, when you're now moving into a traditional market, obviously under a different name, but yeah, how do you see let's say double game?
I, I don't think it's a double game. I think it's just the evolution of the
Uh
space.
huh.
You look at a lot of the things that are happening, like even with the DATs, for example. That's something that was probably un, unheard of a couple of years ago, but right now it's all the craze in the market,
Growing really fast, yeah.
growing really fast. The way that we look at this is as as custodians of a layer one chain such as Polymesh, which has been super compliance focused. By going public, we are offering the markets a level of governance that has not really been seen before in this ecosystem. I don't think any L1 chain, and especially such an old player like Polymath and Polymesh, going public just provides this level of transparency that the crypto market is just not used to.
Mm-hmm.
And I think that is a great thing. And I think we're the first and the only at this point. And I hope that this would be able to set a precedent for the market in terms of what transparency would be required from the overall industry as we move forward.
We were talking about this in the same studio a couple days ago. Yeah, um, you've seen a couple very successful cases of crypto IPOs recently, and I think that comes to show that there is a big appetite from more traditional markets to enter the crypto market, but in a way that's familiar to them, in a way that's, let's say, within their rules and within their codes, not really just aping into shit like we in the crypto market usually do. And wanted to ask you as well, like, how have you seen? Is there anything coming from crypto that has surprised you when it comes to, let's say, taking this more traditional path?
Um, Carlos, I would ask you to rephrase that question.
Right. What do you think, like, the crypto market, this is a better way to phrase it. What do you think the crypto market could learn about, like, the process of going to a stock market, doing an IPO, that transparency, that, like, confidence you have to give investors?
I believe, Carlos, you and me and most of the people who might listen to this podcast are well aware of the amounts of scams that have gone into the crypto market,
Oh, yeah.
the amounts of pumps and dumps, and everything that we've seen. I think we've seen a lot under the sun here. Given given that the market has been kind of shrouded in mystery to a certain extent, anonymity. Although I respect that, I appreciate that. Uh, when you're doing something on a public level, I believe you should not be afraid to show your face and to back up what you say and actually do what you say you're going to do. And I think Polymath is a great example of that. Vince and our CFO Natalie, they've worked tirelessly in order to get this public listing in order. And I think this is just going to set a new level of transparency in the market. and I'm really looking forward to seeing how this could set, you know, set kind of an example in terms of what the future or what the future of this convergence between the Web3 and Web2 worlds, what that could actually look like.
Do you think in the end they exist as separate worlds, or are we in for a total fusion, like an evolution from Web 2 to Web 3?
I think it's an evolution. I don't think these are separate worlds at all, because money. What is money at the end of the day? It's just a store of value, and you can pick up any cryptocurrency and ask somebody, and they'll probably think it's a store of value as well. Even if it's a meme coin, some people would consider it a store of value. Similar to the US dollars. So I think this is just a transition, an evolution of financial markets, of money in itself. And yeah, I think this would go hand in hand.
Yeah, and I think like that's the most interesting part. In the end, you do have a future where everything is sort of trading on the same rails. Maybe not on the same level, maybe not on the same platforms, but everything is using the same rails, from the meme coin I launched in my house to the NFTs to the tokenized real estate to the treasury bills and so on. And I think that will make for a very, very interesting future, and I hope also more inclusive. In the end, I do think wholeheartedly that we're in for a more inclusive financial panorama, which I'm all up for. Talked about in this podcast, like and maybe you can relate to this as well, like growing up in certain nations, you never had access to financial instruments that were like reliable and good. So like that will change what life is like for a lot of people that want to access these opportunities.
Absolutely. I think access, financial inclusion are going to be major themes, and I think crypto does open up a lot of these things for global markets. And I think that is a wonderful thing. But at the same time, just because you have access, that does not necessarily mean that you should gamble your money. So
Yeah, do it responsibly.
do it responsibly.
Are you on Twitter?
Yes.
What's your handle so people can go follow you?
I actually do not remember. I think it's Nabil Irfan __. But LinkedIn is probably the best way to connect, which is linkedin.com/in/Nabil NABIL -Irfan IRFAN.
And we'll link your profile in the description of this episode, as well as everything for Polymath, so people can get in touch with you and, of course, learn more about Polymath. Thank you very much, man. It's been a great episode.
Thank you very much, Carlos.
And if you're watching this, of course, remember to like and subscribe and do everything that you need to do on videos. This has been our last episode of the season. Thank you very much for everyone that stuck through all of this. Hopefully you learned as much as me. Thank you very much, and we'll see you soon for season 2.